Brilliant. Thank you, Charlie. And thanks everybody for being here. This is a really hot topic now. Obviously, it's been bubbling away in the background, actually for 10 years, believe it or not. But now it is really sort of right around the corner with the first phase starting in April 2026. And as Charlie said, I'd really like this to be as useful as possible to all of you. So I'm very happy to have questions. If there's anything I can't answer, we'll come back to you a bit later on. But please, yeah, feel free to stick your questions in the chat, as Charlie says. Right, I'm going to go through the nerve-wracking screen share moment and pull up some slides. So Charlie, will you just confirm that you can see all of that okay and you can hear me okay?
Yep, can hear
All
you okay. I
good,
can
and
see
you
that
can see
okay.
the
That's all good.
slides. Fantastic. Okie dokie. Um, we'll also share these slides with you after the session, so please don't worry too much about trying to grab information as we go along. It'll all be there for you in due course. But just to kick you off, there's a little QR box there, which has a whole host of resources available to you, which we have on our Musicians Tax Advisor website. So by all means, grab that to get going. But there'll be lots of other things that will pop up over the course of the webinar. So that's not the only thing. 2 seconds to tell you who I am. I'm Sinead Pratchka, as Charlie introduced. I am a musician. I trained as a musician at the Royal College of Music and then at the National Opera Studio. And then I did a fairly major career about turn in my early 30s and retrained as an accountant and a tax advisor. And now run a very specialist musicians and music organizations tax and accounting practice. So we only work with musicians or music organizations. That's our primary focus. And yeah, it's the world that I know and that my friends live in and my husband lives in. And so we're very committed to trying to make sure that there's some good resources out there for freelance musicians who are obviously they're the focus of this session today because it's freelancers who are affected by this. So that's us. And here's the agenda for this morning for the next. I'm going to talk for about 40 minutes, with interspersed with a few questions here and there, I hope. But then time at the end as well for you also to answer, to ask me any questions. We're going to talk about why is it happening? Why all this big change in the first place? Who are the key groups of individuals who are affected? When is it going to affect you? When is it going to be an issue for you in particular? And how can you figure that out? How can you determine it? And what exactly is involved in making sure that you then comply with all of the new rules and regulations that are coming in? As part of everything, we're going to have a look at the sort of the rules and the regulations, some of the exemptions or exclusions, get out clauses, if you like, that might be available. This is a slightly vague one, but we're going to try to define what digital actually means, and because it's really important in the context of making tax digital, understanding what you can do and what you can't. And then a few kind of tips and suggestions to help you get ready and to make it as painless as possible. Although I have to say, this whole process is a learning curve for everybody, for accountants and tax professionals and individuals, self-employed and landlords. We're all in the boat together, to be honest. It's a learning curve for everybody. And, it's a fairly steep curve while we're at it. Okay, so first up, actually, just before, I'm going to leave this slide in place. But while that's there in front of you, I'm going to ask Charlie to put up the first poll so that we can have a sense of those among you for whom this is the first time you've ever really tackled this, and those who actually feel like they've got a reasonable grip on what's about to happen. So, Charlie, will you launch that for us?
Will do. Only one moment.
Here we go. Brilliant. Oh, wow. Fantastic. Okay. I'd say that's looking like a reasonable representation of where the population is at the moment. That's pretty good. Yeah, thanks. Okay, Charlie, I'm going to minimize that. So there are 860,000 self-employeds being brought into MTD for income tax in 2 months. That's when the first trigger point happens. And you'll see that the focus is on self-employed individuals, so sole traders and or landlords, and we'll talk about that because it's the aggregate of those two sources of income. If you happen to have both, that's really important. Um, how the income thresholds and what pulls you into this new system, how that's determined. It's based on what's called qualifying income. We'll talk about that. Most importantly, maybe for this morning, what's not included. Landlord, limited companies are not included. Partnerships are not included at the moment, certainly not for the next couple of years, although it's highly likely that they'll end up on the roadmap. It starts in a couple of weeks, basically. Oh my God, April 2026. But then it's being phased in 3 tiers over the next 3 years, with the final tranche, who are people with qualifying income of £20,000, being brought in April 2028. Unless you have an exemption which fits, and we'll absolutely have a look at that in case that's something that can you could take advantage of. What is involved? In other words, what does it mean to have to keep digital records? What does sending quarterly updates actually look like? And what do you do about the self-assessment return you currently submit? So let's go first of all to the why. Why is all this happening? I don't know if some of you have begun to see this ironically analog little logo appearing on buses and in different places. It's the beginning, it's HMRC's sort of publicity campaign or education campaign, I guess, has kicked off with this guy. So you'll begin to see him more and more. The reason for the change fundamentally is that the HMRC reporting system as it exists right now is more than 30 years old. HMRC themselves will tell you that it's creaking, it's beginning to fall over, it's no longer fit for purpose. They literally have to move all of the data to a new system. And as part of moving to this new system to capture the information of all the taxpayers that are involved, they're aiming to improve customer services. That would be great. They're hoping to modernize the tax system, close the tax gap. They genuinely feel like there are mistakes and errors in people's tax reporting that can be improved by the use of this new digital reporting system. And obviously, it's just a general keeping pace with the world we live in and technology and digital maintenance, I suppose, for want of a better word. So let's go into who is affected. That's a very technical box. But I'm going to talk first about what qualifying income is, and then we're not going to do too much on this slide, but I hope it'll be useful for you to refer back to over the next couple of weeks in order to figure out whether you're in or not. So qualifying income means the total income that's reported in and or your sole trades, your self-employment pages, or your land and property income. Some of the key things you need to keep in mind is it is your turnover figure that HMRC are looking at. They're not looking at your profit figure, which is what you're used to thinking about, because you put your income, then you put your expenses in. It's profit that's taxed each year as part of self-assessment. But in the case of qualifying income thresholds and whether you're pulled into MTD, they're looking at turnover. So that's also sometimes called your gross income before expenses. And that's the really key thing you need to know. So for people who are due to come in April 2026, that will be determined by whether you have more than £50,000 being reported in aggregate between self-employment gross income and land and property gross income. And land and property would include both UK properties, and if you rent property abroad, it would also include your overseas properties. The way to determine those numbers, like what is my turnover and which bit of my tax return should I look at, is this list of boxes. And it's a bit small. I'm sorry, I couldn't get it to go any bigger on the tax return, but this is a model self-employment pages example. And you'll see that box 9 is here. So if you have more than £50,000 being reported in that box, or if the combination of that box and that box is over 50,000, then you're going to be into MTD for income tax. And you'd be looking at similar boxes for your land and property pages. I'm going to go through just two more about qualifying income, and then I'm going to take a pause and we can have some questions if we need to. So as I've said, I've droned on about this a lot, and I think it is worth really banging on about it because it's a source of real confusion because it's not the profit figure. As we've said, the box totals are combined. And here's another little thing to just watch out for. If you've started your self-employment partway through the 24-25 tax return year, which is the tax return that was due in just at the end of last month, and that is the return that HMRC are using as the kind of the reference source to determine your qualifying income. But if you started either land and property rental income or self-employment partway through that year, then the numbers that you've put in for your turnover, your gross income, are time apportioned. So for example, if you only started your self-employment on the 1st of January 2025, that's only 3 months of the total 12 of a tax year. HMRC will look at the income figure you put in. They will reverse engineer that 3-month figure to say, well, what would that have been if this person had been trading for 12 months? So if you did really well, for example, in your first 3 months, even though that income might only have been, well, let's say it was £20,000, actually, if you extrapolate that back up to a 12-month equivalent, you'll be in to MTD for income tax as of April. So that's just a little thing to watch out for there. Charlie, shall I just take a pause because this is a fairly technically heavy webinar. And so let's have a breather and just see if there are any questions.
Yeah, absolutely. We do have a couple of questions. The first coming from Terry. Terry asks, does gross income include capital expenditure?
No, Terry, it wouldn't because by its very nature, it's expenditure. So I think what you mean is because it's reported slightly differently in a set of accounts, CapEx is not part of your day-to-day trading expenditure. But yeah, the answer is no. It's literally, I mean, it is, although that list of technical boxes on your tax return looks sort of unpleasant to look at, it's not very user friendly, it is actually the definitive place to look to determine whether you're affected by this. So if your number in that box is higher than 50k, you're in. Irrespective of whatever you were reporting in that box. But obviously we wouldn't normally be expecting you to be reporting capital expenditure in that box in the first place. I hope that makes sense. Another question?
Great, yeah, thanks. We've got one from Hussein who asks, does this include a mix of incomes, including PAYE?
Yeah, great question, Hussein. And the answer to that is it does include a mixture of incomes, but not PAYE. So the income sources are very, very explicitly limited to sole trader income and land and property income. And as you all well know, there's lots of other sources of income, especially for those of you who are maybe a mixture of freelancer and PAYE. It's a really common scenario. Your PAYE income is not included. And again, if you think about it, there's a real logic to that because your PAYE income is reported on a different page on your tax return. It goes through on your employment pages, but we're only looking at boxes on self-employment pages or land and property pages. I can actually see the questions now, Charlie, so I'm going to go ahead, I think. Let me know if I've skipped over anybody, but I can see Anonymous says, using digital record keeping, currently logging my income from the sole trade. Yes. Yes. So in answer to the question about logging rental income along with sole trader income, that actually wouldn't normally be technically what HMRC would expect in any case. So I would encourage you to separate that out either way. Nothing to do with MTD, but obviously the question then, when you do separate it out, the question will still be, is if you look at the one source and then you look at the other source, are the aggregate of the two going to tip you over the threshold? Holly says, what would happen if you don't qualify in 2026, but you have a good year and unexpectedly, we're going to get to that, Holly, because the thresholds are going down. And the next threshold is 30,000, and then it drops down to 20,000. So obviously, turnover income of £50,000 is quite a high benchmark to start with, but that is very rapidly dropping down in each of the next 3 years. So I hope that answers that question. And if you, for example, had the bumper year in your 24-25 tax year, and that's an exceptionally high year for you for income, that's still, unfortunately, not going to get you out of the requirement to then be in MTD for income tax. There's no kind of exemption because it was an unusual year. We'll talk in more detail about exemptions, but that would not be one of them. Yeah, great question, Charlie. This is something I would really encourage people to think carefully about. It actually applies not only to the example you've given us, where you're sharing a studio, somebody's putting all the money into your bank account, you're then paying the studio rent. But I would also encourage people, for example, who act as fixers, session musicians who might organize a group, and then the income all comes to the one of you, and then you divvy it out to all of the other colleagues that you've been working with. Again, that will really skew the results, because if the income is put in your accounts in the first place, and then you are showing the payments to your colleagues as expenses, sort of subcontractors almost, if you like, your income it's not artificially high, but in relative to your profit, which is going to be more realistic, then your income is going to look a bit artificially high. And yes, if it's over the 50K, it's over the 50K. That is a very black and white line. Interest income, absolutely not, Terry. Outside the scope of MTD for income tax. Investment income, no. Capital gains, inheritance income, no. Literally self-employment income and property income only. Right, let's crack on. So here we go. And this is maybe the slide that you want to kind of, download and stick on your fridge so that you've got it for the next couple of years. Because if you're not in this year, you may well find you're in next year or the year after. So as we've said, it's 50K in your 24-25 tax return, brings you in this year in 8 weeks or so. 30K income in the current year. So this is the tax year we're in right now. I mean, we're quite close to the end of this tax year. We're finishing on the 5th of April, 2026. So if you already know, for example, that your income this year before expenses has been over £30,000, then you already know that you're going to be brought into this scheme as of April next year. So you've got just over a year before you're going to come in. And then it drops down to 20K in 26-27, which is the tax return year that's starting in April. So it's all quite sort of hot and coming in pretty thick and fast. And although you might be thinking, woo, not me this year, it's going to be you fairly soon. So just be really aware of those start dates. We're going to talk about non-residents, exemptions, and special cases. I'm just flagging them here, but we will come and talk about them in a bit more detail. So I'm just looking at this question. What are my thoughts about becoming a business? Who can be financially MTD applied to business? I think in this instance, you need to define what you mean by business. I suspect what you mean is limited company. Should you switch your sole trade to a limited company? And to be, I mean, I will give you my opinion. There will be varied opinions on this one. And I would say it's not worth the hassle, because there's a lot of compliance involved in trading as a limited company as opposed to a sole trader. I would question whether the savings that you might make there in terms of time and maybe having an accountant to help you are actually really worth it in the grand scheme of things. So my opinion, if you mean limited company there, anonymous attendee, would be, I don't personally think it's worth it, but you'll get different answers from different people, and it really depends on your circumstances. If you're hovering on the brink of incorporating your business, your sole trade, which means converting your sole trade into a limited company, if you're right on the brink of doing that anyway, then this might be the final push. I could absolutely see that. But just to do it to get out of MTD for income tax, I think I would say probably not right. Not worth it. Grants from ACE income, Liza. Yes, if it's part of your turnover, if those grants, sorry, excuse me, if that grant income is reflected in your self-employed income, then yes, it will pull you in. If you're running a charity, for example, or a different kind of entity and you're not a sole trader, then no, it will be outside. Holiday lodge that we rent out, but have it as a limited company, no. If your holiday lodge income is going through a limited company, that is its legal entity, it's not personal to you as an individual, and it's not part of a trade, a self-employment trade, then no, it's not affected by MTD for income tax. Okay, let's talk about the get outs in case anybody can take advantage of these. So, yes, Liza, in that case, no, your ACE income is safe. You're outside the scope of MTD for income tax. So, right there at the top, we're going to look at partnerships. I say that one with a caveat because partnerships are going to be brought in almost certainly in due course, but you are talking a good couple of years away. Limited liability partnerships, which is the acronym LLP, that's what that means. Also, I suspect will come in, but not, again, not for a while. There's talk of limited companies coming in, but that's now been pushed out to about 10 years down the road, I believe. It was originally on the roadmap. I think now it's fallen off the end of the roadmap, but you know, if it was ever on there, you've got to question whether it will reappear. Obviously, if your income stays below £20,000, you're not affected. There are some really clear exemptions: foster carers, trustees, personal representatives, shared lives carers, exempt. Let's look at this third column, the digitally excluded, because this is just a can of worms waiting for everybody. There's digitally excluded. There's excluded on the basis of health, age, or a disability of some sort. There's practicing member of a religious order, and there's no access to internet, which actually, now that I think of it, is the same as digitally excluded. I've repeated myself there. Yes, I will absolutely do that. And I've just not done that. Anonymous attendee, you've asked me to read out the question before I answer, which is a great point. Apologies for not doing that. I will make sure I do that from now on. So going back to the slide and the business about whether you might be excluded on one basis or another. Digitally excluded essentially is trying to capture those people who live in such remote areas that you either have no internet connection at all, or it's so unreliable as to be unusable. But HMRC would really literally expect you to be totally unable to make a connection. So for example, if you have a mobile phone that enables you to connect digitally to something, to the internet, then they would probably say you're not digitally excluded. Age, let's talk about age first. There's no age limit. So you could be 90 and required to be part of MTD. There's no reason explicitly why you would be excluded on the basis of your age. However, age and health condition obviously go hand in hand to a degree. And a health condition is something that might enable you to make an exemption application to HMRC. So that is worth thinking about, as is the disability. The process of applying for an exemption will probably make you laugh, but it is necessarily an analog process because by its very nature, excuse me, by the very nature of making the application to say, I can't be part of this, I can't do the whole digital thing, you wouldn't be doing that on an online form because you'd sort of be contradicting what you're saying. So it is a letter to HMRC or a phone call. I would say probably go for the letter, outlining why you think you can't, why you should be digitally excluded. It goes to a specialist team at HMRC who review it and will give you an answer. You are expected to assume the answer is no until you've heard yes. And actually, it's only very recently, I mean, within the last week or so, that we're beginning to get feedback as to how HMRC are responding to these types of exemption requests. But I can tell you that in the last week, I know of 2 exemptions that have been granted. One, neurodiversity in particular is worth pointing out here. So I know of an exemption that was granted on the basis of ADHD and autism, a combination diagnosis that enabled somebody to say they weren't able to cope with the digital requirements. And that's very much a personal choice as to whether you feel, if you have got a disability, whether that disability inhibits you from complying. And if you do, and you want to go down that route, then I would say do that as quickly as possible, because you want an answer if you need it. If you would otherwise be brought in April, you need your answer as quickly as possible. And then just very briefly to touch on the practicing member of a religious society. That would be, for example, if you're part of a religious organization who fundamentally would disavow any form of electronic communication or digital connectivity, if you like. So on that basis, you wouldn't have a phone, you wouldn't have broadband, you wouldn't make any sort of connection to the digital world. So obviously it's going to be a fairly small subset of society, but if it happens to be you, then that is a possibility. Now, we had a question earlier on in the session about what if you've had this bumper year, but it's disproportionate to your usual kind of business year as a musician. Unfortunately, if you're mandated in, irrespective of whatever the reason was, you have to then drop below the threshold for 3 consecutive years before you can make an application to get back out. So if you're in, I mean, using that very specific question, your bumper year was 24-25. That pulls you in as of April 2026, so 2 months from now. If your income stays below the qualifying income threshold for the next 3 years, you can get back out as of April 2029. But of course, the qualifying income threshold is dropping. So you'd have to stay below 30K in the current tax year, and you'd have to stay below 20K in the next tax year. But if that's the case, then yes, you can make an application to get back out again. So let's get on to some really practical things. And what, let's make the assumption that you're in either way, either this year, next year, or the year after. And what can you do to help yourself get ready? So Mickey has asked if I can summarize my main points for people who've missed, and I will absolutely do that at the end. And Mickey, the slides and the presentation itself are both going to be available after the session as well. So let's first of all try and define this idea of a digital report into HMRC. The idea, as I said at the beginning, is that HMRC think this is going to close the tax gap. And what they want is, instead of, if you think about it, for those of you who currently, in fact, I might, oh, it's not an actual poll, never mind. For those of you who at the moment complete your self-assessment tax return yourselves, you'll know that it's basically like a giant Google form. You type in the numbers in the different sections, and then that goes off to HMRC. What they want is something that is sort of can't be tampered with, if you like, on its journey from when, let's say, the income source is recognized. So let's say the point at which you invoice your promoter, or your promoter pays you, or you receive income from your licensing body, or whatever it might be, that moment, that digital link is created at the point that it hits your bank, for example, or it hits your accounting software if you're using a bit of software. And the idea is that it then doesn't get touched until it flows into HMRC. So there's nothing that can kind of make an error, if you like, or make it go wrong on its journey into HMRC's portals. And the digital record itself will be made up fundamentally of the date it happened, the amount involved, and a category of some sort. And the categorization is the same categorization we have in the self-assessment tax return, I'm focusing on self-employment for now, the self-employment pages, which most of you will be familiar with. You've got categories like travel and subsistence. You've got, like, for example, a thing that allows you to maybe claim a portion of a use of home or a studio rental. You've got advertising costs, you've got office costs. All of those kind of categories are the same categories that they'll be familiar to you as part of these quarterly updates. I'm going to just go back, actually, because as I said the word quarterly update, I realize we're about to talk about quarterly updates, and actually I think I glossed over one really important part at the very, very beginning, which is that this whole process of digital reporting into HMRC, and I know a lot of you know a little bit about it already, but for those of you who don't, it's a requirement that not only says it has to be a digital report into HMRC, but it's also increasing the frequency that you make that report in. So it's taking you from an annual report into HMRC into a quarterly report into HMRC. So now you're updating HMRC every quarter as to the income and expense that you've earned in that quarter. And actually, we're just about to get onto this in the next slide, and it'll show you it all a little bit more clearly. In fact, I'm going to skip to the next slide for a second so that we can talk about the quarters, and then I'll go backwards for a minute. So any of you who are VAT registered, you'll be familiar with this sort of quarterly deadline aspect. But one thing I want to flag is that you will have the option to either report on what's a standard reporting period, in other words, the tax year that a lot of us are used to, which bizarrely runs, as you know, from the 6th of April in the year one to the 5th of April in the following year. So let's call that the standard period, in which case these are your 4 quarters: 6th of April to 5th of July, 6th of July to 5th of October, 6th of October to the 5th of January, and 6th of January to the 5th of April. And then your deadlines for each of those quarters are as they're set out here, but I will just read them out as well. So quarter 1 is due the 7th of August, quarter 2 is due the 7th of November, quarter 3 is due the 7th of February, and quarter 4 is due the 7th of May. Now, if your business is already VAT registered, for example, and you're used to reporting in calendar quarters, or you use calendar quarters anyway because you just prefer them, that's absolutely fine, but you'll see they're identical deadlines. So there's no change to the deadline, but it's perfectly acceptable to opt into a calendar quarter reporting period. If you do that, you have to be really careful that you do that at the beginning of your very first quarter. So big flag for those of you coming in April, 8 weeks from now, when you get to your deadline in August of this year, make sure that if you want to report on calendar quarters that you elect for that, there will be some kind of a tick box option at the beginning of that first quarter update that you are submitting, because that will be the first of your 4 quarterly submissions to HMRC this year. Because if you miss it, you're stuck on whatever you are in by default, which would be the standard period. I'm going to open this up to questions in a second, but I'm just going to go back a slide again now for a minute and go back to, so we've talked about the digital, we've talked about the quarters, but what's involved in the digital part of this quarterly update? Essentially, as I said, you can't manually type entries in the way you do at the moment into your tax return, which is kind of big Google form basically, and you can't cut and paste entries from one system to another. This is the whole thing that HMRC are trying to eliminate, because this is where human error creeps in, and that's what they're trying to eliminate. You can use cloud accounting software, or you can use a combination of a spreadsheet plus bridging software. But I suppose the takeaway here is that software of some sort is going to be involved, and or be your HMRC tax return if you're using your government gateway provided software. That is software, but it's not compliant under the new rules. And that's really the thing I want to make sure everybody understands. We've looked at quarterly reporting deadlines. There's no questions at the moment I can see in the Q&A. I'm not looking at the chat. Charlie, I'll just have a slurp of water and give you a chance to just have a look at chat. Tell me if there's anything we should be addressing in there.
There's nothing in the chat at the moment. So yeah, you're welcome to continue when you're ready.
Great. All right, then let's keep going. So you're going to be reporting this digitally. You know that. You're going to be reporting it. Yeah, I'm getting to, I've just been asked if there is software I'd recommend, and there's absolutely a section in this presentation about software, because it all sort of hangs on software at the end. So we are going to get to the software conversation very soon. Just speaking about the quarterly update very briefly, as I said, it's a summary of your income and expenditure, but maybe it's easier to think about it in opposition to your tax return. So your tax return is like an umbrella that pulls in all of the information about all different kinds of income. And as people have been asking earlier in the webinar, it pulls in your employment income, your bank interest. Maybe you have some well, you wouldn't have inheritance income, but you might have other sources of income, perhaps investment income is coming in. They're all captured by your tax return. Your Making Tax Digital for Income Tax Quarterly Update, QU for short, because that is quite a mouthful, is only interested in the income and expenditure of that quarter. That's it. It's not interested in your PAYE. It's not interested in your bank interest, none of the other things. It's just income and expenditure that is required to be captured by your quarterly update. Those of you who use capital allowances, maybe you've made big investments into equipment, for example, or software, production stuff. Those you might well know are often dealt with under what's called the capital allowances scheme in your self-assessment return. You'll have a choice here. You can either make adjustments as you go along each quarter, and there will be a value to that, which I will come to, or you can put it into a section which is the final declaration, which is your fifth and final kind of mop-up declaration to HMRC, and that is the equivalent of the tax return as we know it now. It's called a final declaration. It's basically your tax return as we know it now. It's a summary of everything, and that's where you can add in the details of capital allowances, for example. Or the other very common tax adjuster that you might want to think about is the fact that if you do rent property, then you will know that your mortgage interest doesn't come out as an expense on your land and property pages. It comes out as what we would call a tax adjuster. It's a line in the tax calculation itself further down that makes an adjustment to your overall tax position, but it's not an expense in the same way that other expenses are. So all of these, we would lump them into a definition of tax adjustments, and they can all be made in the fifth and final submission, which is your final declaration. Or if you want to go through the legwork, or maybe you have software that enables you to do it easily, you absolutely can make those adjustments as you go along each quarter. Now, why might you want to go through the extra headache? The reason you might want to do that is because as part of this quarterly update submission, HMRC will generate a cumulative tax bill for you as you go along. And that is going to be, for sure, one of the really positive aspects of this new system, because it will give you a picture of what your tax liability is building up to be as you go through the tax year. So you're not going to be clobbered with this horrible surprise on the 30th of January. You'll actually have a really clear picture as you go along. I say really clear picture. I should probably caveat that, because obviously information out is only going to be as good as the information in. So it's a clear picture only insofar as what's gone in to your quarterly update is accurate, has everything in it that flows into your tax calculation, and it truthfully probably won't have everything in it, but so take it with a grain of salt, but it's a step in the right direction to help you understand what your tax bill is going to look like at the end of the year. And obviously, the more data you put into those quarterly updates, the more accurate the tax assessment is going to be coming out. So that might be the main reason to put that extra effort in. The other thing to keep in mind with quarterly updates is that they are cumulative. So you'll do your first quarter one update. That goes into HMRC, and then you'll come to your next quarter. And for example, if you've made a mistake in the first quarter, you update it in quarter two, you fix it, you correct it, you add in all your Q2 information, and the whole picture recalibrates, and you move on from there. Same in quarter three, same in quarter four. So, don't be panicked if you've made a mistake. It doesn't mean you have to go back and start again. It will cumulatively be updated as you make your corrections over the course of the year. But I do want to flag this final point on the quarterly update information slide, which is quarterly updates are required for each of three main sort of sources, if you like. Sole trades we've talked about, land and property we've talked about, but land and property splits out into UK land and property and overseas land and property. And you would have to make separate quarterly update submissions for each of UK and overseas. So if you're brought into MTD, I've used this example here, which says you've got two different sole trader sources and you've got one property rental source. You're looking at 12 quarterly updates because each quarter you'll have quarter for your one sole trade one, a quarterly update for sole trade two, and a quarterly update for property rental. Combine that over the course of a year, that's 12 quarterly updates. In fact, it's going to be 13 because you'll then have your final tax return. I thought it would just be too horrific to add in an overseas property, so I skipped that. But of course, you could take it up to 17 if you really wanted to have fun with it. Right. I'm going to take a deep breath and read some questions. It gives me a chance to just sort of slow down for a second. I'm going to skip questions that have been answered, if that's all right. We have a good question here, which is very relevant to this slide, which is, I currently submit all my trades as one. Will I have to separate them out? Photography, music, corporate, etc. And actually, this is a great question because I would really specifically urge you not to separate them out. Because separating them out won't save you from MTD for income tax in the first place. Even if all of them sit below the threshold, they'll be looked at in aggregate, so it doesn't help you there. But every separate one will require a separate quarterly update. So you don't want to do a quarterly update for photography, a quarterly update for music, a quarterly update for corporate gigs. No, put them all together in one sole trade, one self-employment report to HMRC. That's one quarterly update. So much so that, for example, we had a couple of clients last year for whom we did the 24-25 tax return, and we knew they had two separate sole trades running. Historically, they would have had two separate self-employment pages going through their tax return. And we elected to put the two together, to update HMRC, say they've combined it into a single sole trade so that we could narrow them down for that very, very reason. So I hope that's nice and clear. Don't separate unless you really, really have to for some reason. I have another question here, which is, what will count as sole trade? Can musician cover composer, conductor, facilitator, teacher? Absolutely. Sole trade is any source of income that you're reporting as self-employment on your tax return. Doesn't matter what it is. It can be all of those examples, plus photographer, plus, I can't even think of the other things, but it really doesn't matter. It's not defined by what you do. It's defined by whether it's reported to HMRC on self-employment pages, which is what we report our sole trader income on, and that's that. I have another question here that says, where will the MTD info display in cloud software? If you don't mind, I'll pause on that one and come back. Please do that upvoting thing if I don't answer it, but I'm going to try and put it into the cloud software section if that's okay. I have another question here. Talking of property abroad, power of attorney, capital gains, tax over here. I'm not going to read out this whole question because it's not relevant to MTD for income tax. Power of attorney over somebody's affairs means that person doesn't have to report under MTD for income tax, and capital gains tax is not part of MTD for income tax. Oh, lots of good questions here. So this is a long one. Just give me a second to read. If I use an accountant to do my tax return, reporting my income and expenditure in the past for them to calculate my final figures, do I now have to do this on my own, or do I rely less on them? Do I need them still at the end of the year to help? They're not a music specialist. They're just generalists. I'm a singer-songwriter. So that's my income. And I do wonder if I need a specialist in the area. So Paul, there are kind of two questions in here. Do I need a specialist? Do I not? I'm going to shelve because that's a different conversation. Obviously, I would say yes, because we're specialists. But it's a very personal choice. However, the question of do I need an accountant or can I do this myself is coming up on a slide, and I do want to talk about that in more detail. So I'm about to ask for a poll, but I'm going to pause on that one and I will answer it in due course. I'm going to move on so that we don't run out of time, because yes, I'm looking at the time. Because we've aggregated questions, I'm going to talk and answer questions all the way up to the full hour. I think we're just about on track, but I'm going to move it along. Just a little watch out here. The tax return deadline, the fifth and final submission, says the same, 31st of January, as it's always been. Quarters are cumulative, as we've talked about. There are penalties, as you know, penalties for everything. And penalties when you're late, penalties if you're inaccurate, penalties if you don't keep proper records. All of those things have penalties attached from HMRC. But the government have announced what's called a soft landing for the penalties on quarterly update submissions. So for everybody coming in as of April 2026, there is a soft landing on the penalties that might otherwise be levied for your quarterly update submissions. In other words, if you're late getting your quarterly update in, it's not the end of the world. But do keep in mind that longer term, those penalties will accrue much more rigorously. And it's a new system of penalties, which I'm not going to go into huge detail about. But in summary, it's 1 penalty point for every late submission. And once you hit 4 penalty points for late submissions or that also relates to your final declaration, once you hit 4, you get £200 penalty fine. And there are various things that sit on your record until you've caught up with those late submissions and before things can reset. So don't worry too much about it this year. As I said at the very beginning, we're all on a big learning curve, and HMRC understand that and they want to support that critically. But do keep in mind, this is your year to practice and get it right. Not keeping digital records itself brings a penalty. So inaccurate record keeping can be penalised by up to £3,000, and keeping digital records is part of this requirement. So by extension, you'd potentially be opening yourself up to a really hefty penalty by not keeping digital records. Another thing I would really urge caution on is, we've heard some people going, oh, I'm just going to submit a nil return for those 4 quarterlies and I'll catch up. It's cumulative anyway. I'll do it all in my 5th and final. That's fine. So that's the kind of thing that's not fine, because it doesn't meet the requirements for accurate digital. It doesn't meet the requirements, not even digital, doesn't meet the requirements for accurate record keeping. You're opening yourself up to a fine there. It's not a solution. Let's just crack on a bit here so we can get into the cloud accounting software section. As part of the cloud accounting discussion, or the software discussion, which we're just about to go into, you really, it's a slide on its own. Your government gateway self-assessment tax return, as you know it and love it, let's say, will disappear. Once you're MTD mandated, it goes away. You can only submit your final 5th and final declaration using MTD approved software options of one sort or another. We're about to talk about what one sort or another actually means, but really, really, really remember this. Your current gateway scenario that you're used to will disappear. Charlie, I've missed a whole bunch of polls. Is there any chance we could do a 2 together or one after the other in quick succession? Let's have the do you use software at the moment? And I would also love to see the do you do your own self-assessment tax return? Because I think they'll inform this next bit.
Yeah, absolutely. We'll have to do them in quick succession if that's okay. But
Right,
yeah.
let's go for it.
I'll launch the software one first. So that should be on your screens now.
Okay. Yeah. Sort of 1/3, 2/3 roughly. Great. Oh, okay, a bit more. Okay, that's really helpful. I'll kind of factor that in the discussion for the next 10, 15 minutes. Next one. Yeah, okay, that's really interesting because I'll tell you that HMRC's sort of data collection, if you like, on all of this, as I said at the beginning, they're expecting 860,000 taxpayers to be brought in April 2026. And of those, they believe that 60% are helped by an accountant. And 40%, the lower amount, are DIYers, if you like. But of course, that is fundamentally linked to the income threshold. As the income thresholds drop, we're going to see that seesaw skew the other way, I think. And that's where these kind of sessions and finding out where you can go for more information is really, really critical. Okay, Charlie, I'm going to just ask you this and you can say no, but if I need to run over by 5 or 10 minutes, is that okay? Or is it a hard stop at 12?
Absolutely.
It's okay?
Absolutely. Yeah, yeah.
Okay,
Please
so
do your thing.
everybody, as you know, I mean, it's just there's so much information. I apologize for being a bit slow on it now. I'm going to carry on to get to the end, but as you know, it's recorded, there's slides, so if you need to go at 12, you go at 12. Okie dokie. I'm going to get into the software bit and then I'll look at questions. I'm skipping over this slide, but just go back and read it. I've cited my source, but it's just a very clear summary of this issue around the fact that the government gateway, as you know it, will be closing once you're mandated into MTD, and just kind of like, how do you think about that? Simplification options, I am going to talk very briefly about for quarterly updates. You have a simple option if you have rental income. If it's jointly owned with somebody else, you can just submit the income each quarter, and then in your fifth and final declaration, that's when you put through your expenses. So that's a nice little simplification. You can, anybody on either self-employment or land and property, use what's called 3-line accounts if you're below the VAT threshold. And that means total income figure, total expenses figure, done. The third figure is your profit, which isn't important for a quarterly update particularly. And that's another really nice one. So for those of you who are used to lumping all of your expenses together and putting it into a single other box on your self-assessment tax return, you can do that too in your quarterly updates as long as you're below the VAT threshold. There's a simplification option for retail businesses where they can put through their daily sort of till thingies. I'm not great on retail businesses. It's not my area, I'll be honest. But there is a simplification option that allows you to put it in as a single value per day rather than every single transaction. And then obviously we've already talked about the tax adjustments, which are things like capital allowances, mortgage interest, personal use share, for those of you who run a car and take a personal use adjustment, or who have broadband and phone charges going through your self-employment, and you're recognizing that there's a personal use element to that. Those personal use adjustments, or business use, depending on which way you go, they can be done in a single fifth and final update. They don't have to be done every quarter. How do you do your quarterly update? How are you actually going to get this done, and what software should you use? Okay, so there are 2 fundamental software types you can think about. You can use cloud accounting software, which is going to be the likes of, there's millions, so I'm only highlighting the ones that we all tend to see in the public domain: Xero, Sage, Free Agent, QuickBooks. There's loads, and we'll come to that as well. So you can do that, and you can do it through an accountant, or you can do it by yourself. Both are fine. Or you can do a spreadsheet, which is enabled by something called bridging software, which, as it does what it says on the tin, bridges the gap and pushes the spreadsheet data into HMRC. So if you're currently a very confident and happy spreadsheet user to record your income and expenditure, that's well worth looking at to see if that's actually maybe the better choice for you. Stick with your spreadsheet, learn how to use a piece of bridging software to push the data on the spreadsheet into HMRC. And we'll have a quick look at the pros and cons. The key thing about both options is, and that's why this diagram has arrows going every which way, is you can do any combination of any of those things. There's no requirement to have an accountant. It's self-assessment by its very nature. Having said that, it's not without its technical complications, this bit. And so for many reasons, you might want to have an accountant, but there's absolutely no requirement to do it. Okay, so looking at the 2 options in a bit more detail. Cloud accounting software, why might you choose that over bridging? If you do a lot of invoices, it's a really nifty way of keeping on track. It really does help you. It's great for keeping track of who still owes you, who's paid you but accidentally got the numbers wrong and they still owe you 50 quid. All of those kind of things are very, very easy to manipulate and understand within cloud accounting software. And I'd recommend it for that. It's great because it can be used on the go. They're all app enabled, phones, tablets, all of that kind of thing makes them very handy. They pretty much all connect to a bank. There are a few banks that don't connect very well, but they're very limited. Most of them will connect to your bank account in what's called a live feed, which means when you log on to your piece of software, it will look a bit like, I mean, it is your bank account data. Essentially, it's the income coming in on your bank account and it's the expenses going out of your bank account. And from there, you categorize things. So it's yeah, it's a bit like sort of an enhanced bank account functionality, if you like, where you're categorizing within your bank account. And I know there are many banks now that allow you to do that within the bank account itself, and we're going to talk about that too. But that's certainly a nice feature. On the other hand, if you are somebody who has business transactions running through multiple different accounts, you have a credit card, two different personal accounts, and a joint account, they're all over the place. A spreadsheet is a much easier way to collate it because you don't want to connect 5 different bank accounts to your cloud accounting software and spend time and waste effort categorizing, Sainsbury's receipts. So if that's you, bridging software and a spreadsheet might be a much better option. It's not quite as user-friendly as a general rule, but like you're going to have a learning curve either way. It's cheaper for the most part than cloud accounting software when you tot it up month on month subscription wise. And there are free options for both of these, which we will come to. But fundamentally, a really critical point is my final comment over here on bridging software is it will not do the final tax return. It will do your 4 quarterly updates, but it won't do the 5th and final tax return. You would need to go elsewhere for that. And as I said a few minutes ago, going elsewhere will not be going back to your government gateway to do the tax return the way you're used to. It will be finding another third-party provider who will submit the self-assessment return, the 5th and final declaration for you. All of the data that's been pushed up to HMRC's cloud by your quarterly updates will be there. It sort of sits there and it goes up and down. It can be shared backwards from the bridging software submissions into your third-party tax return software, but it won't go into your government gateway. So that's something really important to understand about the choices. The cloud accounting software is not a click of a button. None of this is a click of a button. So do not listen to any software vendors who are telling you it's a piece of cake, it's no big deal. It's as good as your usage of it, and the data is as accurate as your understanding of how to use it. So, take every vendor's comments with a pinch of salt on that one, but you get used to using it. And we've been running practice clients, if you like, on this for a year, and I've had some really lovely comments from people going, this is brilliant. I get it now. I love being able to do it on the train on my way to work. I love being able to send out the invoices. I really like the clarity I have over how I'm doing over the course of the year. I can see what my business profits are with the click of a button, having done all the other button clicks. So yeah, pros and cons, really do think through them carefully. Bank accounts. Oh, the banks are really getting in on the action here. And there's been a load of recent announcements of banks that have partnered with cloud accounting software solutions to enable you to file quarterly updates through your bank account. So I'm just going to flag a few key ones. NatWest Group, who have a partnership with Free Agent as the cloud accounting software. Now, Free Agent is a really, really good bit of cloud accounting software. As it goes, it is pretty intuitive. It's got excellent customer service. I'm not affiliated. I don't make anything from saying any of that. And you have it free as part of any as part of a number of different NatWest Group bank accounts. Metal in particular is the NatWest account that it comes with, but it also comes with other NatWest Group accounts. So I would consider that if you're a NatWest banker. Starling have recently paired up with a crowd called Ember, and they're offering MTD submissions through Starling Bank. HSBC announced last week a partnership with Sage. Sage has been around for a long time and is a very reputable source of cloud accounting software. Monzo are running their own. Barclays apparently have an app in the making. It's not ready yet, but they'll all be there. But I refer you to the watch out on number 3, which was too far back, can't find it. The watch out on number 3 was it won't do your final tax return. So that is the watch out if you decide to use your bank as the solution for the quarterly submissions. So what do you need to do to get ready? I'm going to crack on and then do questions for a few minutes so we at least just get to the end. First thing to do is go back to the beginning of these slides, have a look at the boxes of the tax return that you need to check and check them to see are you in. And then be aware of the future dates in subsequent years if you're not in this year. The second thing to do is to have a look at the exemption criteria and see, do you feel you meet any of the exemptions? And if you do, write that letter today or tomorrow at the very latest. The third thing to do is to decide, is this too much for you? And do you want to move to using an accountant if you don't already? If you do decide you want to go to moving and using an accountant, then start speaking to them now, because accountants, people like me, are really, really busy looking after their own clients. We're on our own learning curve, trying to get to grips with it. We're sharing information as we learn it and as we get it. But it's a very uniquely busy point in the life of an accountant or a tax advisor. So just get in there quickly if you think you're going to be asking the questions. Do not go in on the 5th of July and go, can you help me, please? And then from there, you'll make a decision about whether you sign up or your accountant signs you up. There's a whole palaver to go through with that. There was a question earlier on, which I'm just going to touch on now, about my accountant and would the accountant do my quarterly updates, or is it me? And do I even still need an accountant? And So I can use myself or our firm as a point of reference. We really strongly believe that for this year in particular, it's better for our clients, for us to do the quarterly updates and the final tax return submission, because there's so much that's new about it. It will have an added cost because there's no way to increase the touch points with your client from once a year to 5 times a year without increasing fees to your clients. So that's an inevitability. Our argument at the moment is that actually it will still be better value for us to do it for you, even with increased fees, than for you to do it, make a dog's dinner of it, and us have to fix it at the end and charge you for that. That's what at the moment I believe is going to be the best solution for our clients. But every accountant is tackling this in a different way. And I know this because I'm in a big group of accountants who are all looking at this stuff all day, every day at the moment. And there's a real variety. There are other accountants who are running training sessions and then would prefer you tackled the quarterly updates yourself. There's others that will do like a walkthrough with you for an hour and then leave you to do it. You know, there's lots of different shades. So speak to your accountant and find out what their intentions are, would be my top point as about people who already have a relationship with an accountant. And the other one is ask them what software preferences they have. If they're a QuickBooks firm, then there's no point in rocking up to them with a different piece of software. Use what they use, what they're good at, what they can help you with. If they're agnostic on software, then go out and do some research. Kate, for your quarterly updates, if you think you're heading towards cloud accounting software, use the next 2 months to narrow yourself down to, if you could possibly get it to one bank account, that would be great. One bank account which is used for your business income and your business expenses only, nothing else. Take out all the personal stuff, move your subscriptions, move your Spotify, move the account that people are used to paying you into. Do all of that admin now so that you can connect your bank feed once you get your cloud accounting software set up, and you're only tackling the data that's flowing from one account. If you really have to connect a credit card as well, then fine, but don't connect multiple accounts. It'll be too messy. Take time to review your software choices. I'm just about to get to a slide that will help you with that. And you could consider joining the testing. Right, these 2 bits are hyperlinked. This one will take you to a software comparison site we have put together. It lists all of the different, well, as many as we know at the moment, software options, their price points. There are free ones on there, and some of the free ones are excellent. But like everything, you have to be mindful about what you need. Is it served by a free option? Is it served well enough by a free option? You know, think about all of those things. So Musicians Tax Advisor, on our website, on our MTD Resource Hub page, we have a link into a software comparison site, which I would really urge you to check out. HMRC also have a how to pick the right software link, and that's hyperlinked on this final second to last slide. So go and have a look at that. And they've lots of information about trying to find the right software. So do read through it. And These 4 resources are all hyperlinked. There's us, Musicians Tax Advisor. As I've said, we have an MTD Hub page on our website, so I would obviously encourage you to go and check that out. HMRC are putting lots of resources out there. The ATT, Association of Taxation Technicians, sounds very technical, but they have an absolutely brilliant pitched at individual taxpayers, not professionals, frequently asked questions page, which is superb. And I would really recommend you click into that from here. And last but not least, a really wonderful charity called the Low Incomes Tax Reform Group. It's a bit of a mouthful, but they're an absolutely wonderful website and resource page for people who DIY their tax. And I would really encourage you to go and check out their site as well. And they also have an MTD hub that they've just released. Last one, there is life beyond MTD, believe it or not. We do a newsletter sort of when we've got something useful to say, roughly every 2 or 3 weeks maybe. There's been a lot about MTD, but it's not only about MTD. It also talks about all kinds of other things to do with tax as a musician and your life and your business as a musician. Little helpful tips, things that we're thinking of. We'd really encourage you to sign up to that because we think it's useful. We hope it's useful. And that's it from me. 6 minutes over time. I'm sorry about that. I hope it's okay for you all. And I'm going to whiz through some questions for anybody who is still with me. Okay, so I'm scrolling back up a little bit. So first question, is there software I would specifically recommend? I will tell you that I use Xero. I love Xero. I think it's a really good piece of software, but it doesn't really have a free option. So that's a consideration. I will tell you that for free options, I would probably say open a NatWest group account and get Free Agent for free. That would be my top recommendation. But there are that's a cloud accounting software solution. There are also free bridging software solutions. So in terms of recommendations, it's very individual. I can't tell you a hard and fast answer. I would say go to our matrix page that talks you through all the different softwares that are available and have a look through some of the categories. We've looked at, will it do the final declaration? How much is it? Is it user friendly? Those are the kind of questions we've asked ourselves and put into this matrix. Next question I have here is, where will the MTD info display in the cloud software? To be perfectly honest, I don't actually know, but I can assure you that it will display somewhere. I mean, once you're in there, there will be a button to kind of say, submit my quarterly update. But if for those of you who use cloud accounting software, you'll know that there's nothing accurate until you've gone through all of your transactions and done what's called reconcile them, which means categorize them, essentially. Once you've categorized them, there will be a button, a bit like there is at the moment, to submit your VAT return, and it'll be the button to submit your quarterly update. Next question. Do I have to have invoices relating to my income? I receive cash from regular workshops that I run. No, you don't have to have an invoice explicitly. This might be a kind of a decent example of what HMRC believe they're improving, because they will now want you to create your digital record, if you like, from the cash receipt into your bank account. I'm going to assume a few things, but straight from your cash receipt into your bank account, you'll bridge that information using bridging software, and you'll push that into the HMRC portal. So that would be a perfectly acceptable way of doing it, Angela. Next question. There seem to be a lot of options for monthly payments to QuickBooks. Oh God, yeah. My accountant uses it. Okay, so I'll probably go for QuickBooks. That makes very good sense, Charlie. But do I need to pay extra to allow my accountant to access my accounts? No. QuickBooks, except on the very, very, very lowest tier, I'm pretty sure I don't use QuickBooks. I don't really like QuickBooks either, but that's a personal thing. QuickBooks will allow you to invite your accountant to almost every tier, and I'm sure that any tier that is MTD capable will also have the option to invite your accountant. So it may be you have to move up a tier in terms of your subscription pricing, Charlie, to see that. I would go and ask QuickBooks, or in fact, I would go and ask my accountant, because they're the QuickBooks expert. So I would go there first and say, which subscription tier do I need? Again, this is something we've done for our clients. We've gone through all of them. We've looked at how tech savvy are they? What's their comfort zone? What kind of income are they reporting? What volume of transactions are they looking at? And then we said, you need this. So I would say go to your accountant and look for the same thing. Terry, can I give examples of bridging software? Terry, can I say go to the matrix for that? But I know there's Absolute Tax is a bridging one, which I think is free. Please don't hold me to that because I've slightly lost track. Tax Calc is an excellent bit of software that we use as accountants, but it also has a sort of consumer-facing product. I would say look at that for bridging software. But we definitely list bridging on our matrix. So have a look at our matrix, which admittedly does need a little bit of updating because there's a lot of releases in the last few weeks. But it will have most of what you need, I believe. Next question, what do I mean by third-party provider, agent or more software? I think, Simon, you're probably referring back to the comment where I said you need a third-party provider to submit your tax return now because it can't be submitted through the government gateway. So what I mean there is I mean software. That software which is a third party in the sense that it's not HMRC's government gateway software that they have at the moment. It has to be something else. I'm pretty sure that's what I think that must be for the final. Yes. So you've said for the final tax return submission. Yes. So third party provider means software other than HMRC software because HMRC are not providing software. Question. Heya, with the quarterly income calculations, will we need to use cash basis, accrual, or whatever we have been using? Juliana, you can use either cash basis or accrual. If you've been using one or the other, I would stick with that. Both of them are acceptable. I assume you'll tick a box to indicate which one you're using. And the other nice thing that you might want to consider is that you can use cash basis as you go through the year. And in your fifth and final declaration, you can make whatever adjustments you might want and need to make for accruals accounting. And you can send your updates to make it an accruals report in your fifth and final declaration. But for the 4 quarterlies, you can just push them through on the cash basis, looking at what's just coming in and out of your bank account. So the answer is both, but certainly both are allowed, but you can actually even use both during the year. And that was a slightly technical answer. I'm going to leave it at that for Juliana, who clearly understands what she was asking about, but I know for some of you, you'll be going, what? And I would just say, do what you normally do. Question. If you do your own accounts, can you not still file your final tax return? Terry, you absolutely can. File your own accounts and file your own final tax return. You just can't file it through the government gateway. You just have to find, there's my word again, a third-party provider. You have to find a piece of software or a software company or whatever you'd call it to capture all of the information that goes into your tax return and submit it for you. You won't be able to use the government gateway software anymore. So if you're brought into MTD, you can absolutely do everything yourself. There's no requirement to do it through an accountant, but you will do your quarterly updates through whatever piece of software you choose, and you'll do your final declaration, which is your tax return, through whatever piece of software you use. And it can all be the same software if you're using cloud, but it will be 2 different combinations if you're using bridging for the quarterlies. And you'll have to therefore find another piece of software for your final declaration or your tax return. Question. Does not all accounting software do the fifth and final return? Yeah, so this is a very, very good question. And I think we have been droning on about it, but I'm going to say it again. No, it will not necessarily, software will not necessarily do the fifth and final tax return. So you need to look carefully at the T's and C's of whatever software you decide to go for, because a software can be deemed MTD compliant by HMRC. It can be listed on their app. It can have a green tick to say it's all good because it's good to do the quarterly updates. That does not mean it's good or enabled to do the fifth and final declaration. So you really do have to check that. To be fair, most cloud accounting software solutions will do the fifth and final declaration, but it's not an absolute, so do check it. I saw something flash past about free agent. It will absolutely do the fifth and final, as will Xero, Get Coconut, QuickBooks, Sage, but the bank account ones won't. So watch out for that. You get free agent free with a NatWest bank account, but it's not your NatWest bank account that's reporting into HMRC. It's just like you sometimes get travel insurance. You're getting this subscription for free because you hold the bank account. You'll still be using free agent in the same way that you would use any other piece of cloud accounting software. You'll use it separate to your bank account. excuse me, whereas um, Starling Bank, for example, Monzo, HSBC, those banks are saying you can submit the quarterly update directly from your bank account, and that is a different thing. And that necessarily won't probably be able to do your fifth and final declaration because, of course, it's only your bank account. It doesn't have the IT capability to capture all the other aspects that are required for your fifth and final, which is your tax return. I am going to say I will do 5 more questions if that's okay, because as you can hear, I'm beginning to lose my voice. If I'm not due to do MTD until 27, is it worth starting now to use cloud and bridging software to get used to it? Corey, I would absolutely 100% say yes. We really strongly encouraged people to come in and be guinea pigs, guinea pigs for us and guinea pigs for themselves. This time last year, I would really encourage you to have a go because you, at the end of the day, you can make a complete unholy mess in whatever you're doing and still use the government gateway to do things in the way that you're used to until the point you're mandated. So this is the year to have a go and try it out. Absolutely. Sarah, if you are not at the threshold yet, would you advise trying to use I've just answered that question, Sarah, so I'm going to go on. Mickey, thank you. You're very welcome, Mickey. If anonymous question, if you get free cloud accounting software like Free Agent, I've lost the question. Sorry, where's it gone? Like a Free Agent, what do you use for your annual return? And is there a free option? So Free Agent will allow you to do your fifth and final declaration. It's a cloud accounting piece of software. Most of them will let you do the 4 quarterlies and the fifth and final. It's the bridging software that won't let you do the fifth and final. Question. Sorry if I'm there are no stupid questions. There are so many questions. The group that I'm in, honest to God, sometimes we get 100 questions from each other a day. It's just unbelievable the amount of questions there are. So there are no stupid questions. Please go ahead and ask. And you've said, how would we submit our 25-26 tax return then? All of the bookkeeping would have had to be done before MTD came into effect. Would I have to use software for it? So your 25-26. So I'm going to make a few assumptions here. Anonymous question, 1209. I think what you're telling me is that as of 24-25, you're going to be mandated into MTD for income tax. And if that's the case, then you'll start doing your quarterly update submissions, and it will be quarterly updates for your 26-27 tax year, which leaves that gap year, the one we're in right now, the 25-26 year. Your government gateway will stay open to enable you to file this current tax year in the old system, I presume right up until the 31st of January 2027. But you would be in that potentially really weird situation. And we take the point. It's very strange. In fact, I'm trying to encourage some clients to sign up so I can have a go and see what it looks like. Because if you're kind of doing in real time, 26-27, you're going to get to the end of April 2027, this time next year, just over this time next year, and you could do your fifth and final declaration for that tax year because you're all done. You've kept all your records. Your tax return for 25-26 will have been, the final deadline for that will have only been a couple of months previously. So yeah, you're going to live in this weird hybrid world. So it's absolutely not a stupid question. And I think the simplest way to say it is your government gateway will stay open for use until the last tax return year that is not part of a quarterly update year. So as soon as you begin to have to do quarterly updates in a tax year, so for example, the first year is the 26-27 tax year, then the government gateway for the 26-27 final tax return will be closed. But the gateway up to then for all prior year tax years will remain open to you as a taxpayer. Stuart, if you link your cloud accounting software to your main bank account, some expenses come out of another account. Is it possible to manually add those into the software? It absolutely is, Stuart, and I would encourage you to do it that way rather than linking an account that you only have like a handful of transactions that are useful in it. You can manually add them by doing something called a journal. It's the kind of thing where you're looking, when you're making choices, you're looking for good software support, you're looking for a good helpline. How do they help you do things like this if you're doing it by yourself? If you've got an accountant will absolutely do this for you. Thank you so much for the session. That's great. My pleasure. Anonymous, assume you will be still able to use the government gateway for all the other matters if necessary, or financial communications being cut off. Gosh, I hope they're not. I would agree. You will, yes, you will use the government gateway as you do now. Like you can check your state pension, you can check child benefit in your personal tax account. But if you don't use a personal tax account, I would begin to get one, set one up. It's sort of like a slightly enhanced version of your self-assessment portal that you might be used to. And I would say, yeah, get the hang of it. But yeah, the other kind of reporting that you access through your government gateway, which would more commonly be things that sit under the personal tax umbrella, you would still have access to. I'm going to make this my last question. Ooh, but it's a really long one, Paul. Give me a second. If I'm adding receipts from Sainsbury's, is it just totally better to be going using free agent with my metal account? I just give my accountant a file of dated receipts for all expenses, so I take it that's all gone. I've made a big tailored spreadsheet for my income, so that keeps me on track, but I know my income and how much of it is free, all that will be lost. Subs for suspects. Okay, actually, I'm going to slightly abandon your question halfway through, Paul, because it's too detailed. But I think just summarizing what you're saying, it sounds to me like you're somebody who's really happy with a spreadsheet setup and you use it really well and you get the data out of it that you need. It tells you the information you need about your business. And if that's the case for you, I would encourage you to continue to use it and to look for bridging software. And to if you have an accountancy firm that you work with, to have a conversation with them about, are they okay with that? Are they going to require you to use cloud accounting software, or would they be happy with a spreadsheet which either they or you would link to bridging software to submit it for you? Wow, there's so many others. I'm just going to check if there's anything else. I've answered that. Third party software. I am going to answer this one. Not clear about software spreadsheet. Okay, I've answered that one more or less. Okay, final question is, what about all our data? And sorry about that, the sun's come in through my window, so I'm hard to see now. I apologize. Yes, this is a concern about all data everywhere. But I suppose the thing I would say is it's as safe as it's always been, which is sometimes not very safe and sometimes safe as houses. I can tell you that HMRC won't see the transactional data that's flowing in from either a spreadsheet or cloud accounting software. And maybe that's something that's nice to know. They will get the summarized totals, but they don't get to see what you've spent at Chimes Music, for example, or how much you've spent on a concert going to see your favorite artist, or exactly line by line what your PRS income was. They get the total submission detail. So it's not quite as Big Brother as it sounds, and I think that's quite reassuring for people to know as well. But in terms of keeping it safe, same thing as before. Do your terms and conditions, do your shopping carefully, look at what kind of authentications the software is using. I wouldn't touch anything that doesn't use multi-factor authentication these days. And I am going to say that's it. Because poor old Charlie probably wants to go and have his lunch if for no other reason. I'm not even sure if he's still there. I'm going to stop sharing.
I am still here. I hope you can all still hear me. I had a couple issues with my internet, but yeah, on behalf of everyone here, Sinead, thank you so much. That was such an informative session. Um, anyone's question? Well, thank you for answering so many questions as well. 34, which might be a record for our webinars. You're
My
a machine
pleasure.
there, Sinead. That was incredible. So
My
yeah, thank
pleasure.
you so much. I mean, a couple people ask about being able to watch this back.
Oh, Charlie, I've lost you there.
Area. And Sinead, I believe, will be sharing it through her channels as well in due
Yeah,
course. So,
yeah, in
um,
fact, I tell you what, oh no, I've lost the slideshow. But yeah, the final thing I would say to everybody, for those of you who are still here, is yeah, the recording will be available through the Ivors, the slides will be available. We'll make sure we can get both of those out to you. And then as far as the resources, I mean, there was the slide showing other organizations that are providing really good resources. And then I would just encourage you to take a look at our MTD Hub page, where we're trying, as we learn stuff, we're trying to upload it there so that you've got access to it. We've got a downloadable booklet to just get you started and thinking about things. We've got the software matrix that you can have a look at to see what might suit you. And there'll be a lot of information coming in the next 8 weeks, and insofar as we can cope with the deluge, we will be uploading it as we get it, and to try and kind of help people stay on track. So sign up to our newsletter, have a look at our MTD page, look at the other resources we put out. You'll definitely get a recording and you'll get slides. And we have a YouTube channel, which is where the recording will sit. Sorry, I should have said that too.